This video is going to be the first in a series where we walk through the stock analysis of the largest and most influential companies in the world. Yes, we're talking about the FAANG stocks. Although people include different stocks within that FAANG acronym, we're going to cover Facebook, Apple, Amazon, Netflix, Microsoft, and Google.
First, we're going to start with Apple, known as the world's most valuable company. In its latest earnings report, Apple posted an all-time revenue record of $123.9 billion, up 11% year over year, and quarterly earnings per share of $2.10. Apple's weighting alone in the S&P 500 index is about 7%, reaching $3 trillion on the first day of 2022.
Apple's market cap is bigger than the GDP of 25 different countries in the world, and these include countries like Ecuador, Libya, Iraq, and many more. Apple also employs 154,000 people worldwide, and it earned over $691,000 per minute in the first quarter of 2021.
Wow. Apple Inc. designs, manufactures, and sells smartphones, personal computers, tablets, wearables, and accessories, and a variety of related services. It operates through the following geographical segments: the Americas, Europe, Greater China, Japan, and the rest of Asia Pacific.
Let's talk about the first quarter highlights for Apple. Total net sales increased 11% or $12.5 billion during the first quarter of 2022 compared to the same quarter in 2021. This is driven primarily by growth in iPhone, services, and Mac. During the first quarter of 2022, the company released the following new products: MacBook Pro, available in 14 and 16-inch models and powered by an Apple M1 Pro chip or an Apple M1 Max chip, third generation of AirPods, and Apple Watch Series 7. The company repurchased $20.4 billion of its common stock and paid dividends equal to $3.7 billion during the first quarter of 2022.
Here's a breakdown of Apple's products and services segments: iPhone, services, wearables, home and accessories, Mac, and iPad.
Here are how those business segments break down in terms of revenue. iPhone sales make up 58% of the revenue. Services make up 16%, wearables, home and accessories makes up 12%, Mac makes up 9%, iPad makes up 6%.
iPhone sales increased during the first quarter of 2022 compared to the same quarter in 2021 due to higher sales from the company's new iPhone models launched in the fourth quarter of 2021 and a different mix of iPhone sales. There are 4 models of iPhones, including iPhone, the Mini, Pro, and Max.
In 2021, iPhone revenue was $191.9 billion. Over 242 million iPhones were sold, and the sales of iPhones have fallen each year since 2015 in China, from a high of 71.2 million in 2015 to 34.9 million in 2020. All other regions have been steady in terms of sales aside from China. As of 2021, there's 1.2 billion active iPhone units out there. 1/5 of those, or 211 million, are from the US alone.
Services net sales increased during the first quarter of 2022 compared to the same quarter in 2021 due primarily to higher net sales from advertising, the App Store, and cloud services. Services sales include sales from the company's advertising, AppleCare, cloud, digital content, payment, and other services.
Services revenue was $68.4 billion in 2021, and some analysts see it as the most important segment of the company, potentially reaching $50 billion in profit by 2025 just by itself. Apple has seen the number of subscribers to its services increase dramatically over the past 6 years. This stat includes subscriptions to iCloud, Apple Music, Apple TV Plus, Apple Arcade, Apple News Plus, and Apple Fitness Plus. As of 2021, there are 745 million subscribers to the different Apple services.
Wearables, home, and accessory sales increased during the first quarter of 2022 compared to the same quarter in 2021 due primarily to higher sales of AirPods, Apple Watch, and accessories. Wearables, home, and accessories net sales include sales of AirPods, Apple TV, Apple Watch, Beats products, HomePod, Mini, iPod Touch, and accessories.
We estimate that AirPods is a $10 billion business on its own, with Apple Watch also potentially contributing $12 to $14 billion per year. In 2021, this segment generated $38.3 billion in revenue since it launched in 2015. Apple Watch has led the smartwatch market with over 50% market share in 2021. In 2021, over 46.1 million Apple Watches were sold, over 85 million AirPods were sold, over 14.8 million HomePods were sold, There were about 30 million active Apple TV devices.
Mac net sales increased during the first quarter of 2022 compared to the same quarter in 2021 due primarily to higher net sales of MacBook Pro and MacBook Air. Apple has kept a core set of products, the MacBook Air, the MacBook Pro, the Mac Pro, and the iMac. 25.7 million Macs were sold in 2021 for $35.1 billion in revenue.
Highly anticipated after the success of the iPhone, the iPad made an immediate mark, adding $19 billion to Apple's revenue in the first year. iPad sales peaked in 2013 with the launch of the iPad mini, enticing 97 million customers. iPad sales decreased during the first quarter of 2022 compared to the same quarter in 2021 due to primarily the lower net sales of the 10-inch version of the iPad. In 2021, the iPad revenue was $31.8 billion. Over 57.8 million iPads were sold.
The strong customer response to Apple's recent launch of new products and services drove double-digit growth in revenue and earnings and helped set an all-time high for their installed base of active devices.
And this all led to strong revenue growth for Apple, and they're averaging about 13% year over year. Now for EPS growth, Apple is averaging 19% year over year, and for free cash flow growth, they're averaging about 11% per year.
Apple's primary revenue generator in recent years has been the iPhone, but with the smartphone market becoming increasingly saturated, Apple's sales and earnings have suffered. Some imply that the company is at a maturity phase of its life cycle and is approaching a crossroads. Apple could experience either a rebirth or a slow decline as its products face increasing competition.
Now let's look at a 5-year chart of Apple stock. Apple's currently following a trend line that started back in March of 2020 during that COVID crash. As you can see, Apple dropped 35% during that time, and it's climbed over 243% to all-time highs since then. The gray lines are support and resistance lines, and this is where the stock has had multiple reactions in the past, so look for similar reactions moving forward at those price points.
When it comes to valuation, we look at over 12 different models to calculate fair value for the stocks that we track. Fair value is the real or underlying intrinsic worth. Based on 15 different models, we believe Apple's average fair value is $162, leaving 3% downside potential from the current price. From 40 analyst targets, Apple's average target price is $191. Its 52-week low is $122 and its high is $183.
So let's talk about what the bulls say about Apple stock. Total net sales increasing 11% or $12.5 billion during the first quarter of 2022 compared to the same quarter last year, driven primarily by growth in iPhone services and Mac. The company repurchased $20.4 billion of its common stock and paid dividends equivalent to $3.7 billion during the first quarter of 2022. Between greater smartphone penetration in emerging markets and repeat sales to current customers, Apple has plenty of opportunity to reap the rewards of its iPhone business.
Apple's iPhone and iOS operating system have consistently been rated at the head of the pack in terms of customer loyalty, engagement, and security, which bodes well for long-term customer retention. Apple is still innovating with introductions of Apple Pay, Apple Watch, Apple TV, and AirPods. Each of these could drive incremental revenue, but more crucially help to retain iPhone users over time. The price is above a 200-day moving average. The average analyst target price is $191, well over the current stock price. 10-year revenue growth is 13%, free cash flow growth is 11%, and EPS growth is 19%.
So now let's talk about what the bears are saying. Apple's decision to maintain this premium pricing strategy may help fend off gross margin compression, but it could limit sales growth as devices may become unaffordable for some of their customers. If Apple were to launch a buggy software update or subpar services, it could diminish its near perfect reputation for building products that just work. Apple is also behind some of the companies like Google and Amazon in artificial intelligence or AI. Apple is also believed to be behind Google and Amazon in artificial intelligence or AI development, and this is notably in the Siri voice recognition. And this could be problematic as tech firms look to integrate AI in order to deliver premium services to customers in the future.
Apple lacks sufficient margin of safety. Warren Buffett recommends buying stocks at a 40% discount from their fair value price to account for potential calculation errors and unknown factors. Apple has a narrow economic moat. According to Warren Buffett, an economic moat is a distinct advantage a company has over its competitors, which allows it to protect its market share and profitability. Their debt to equity ratio is over 170%, and we prefer that to be under 40% per Warren Buffett's advice. Competitors in their markets use a combination of aggressive pricing, low-cost structures, imitating Apple's products, and infringing on its intellectual property.
So to help our channel grow, please do 3 things for us right now. Make sure to give us a thumbs up, hit the notification bell, and subscribe to our channel.
We would love to hear what you think about Apple. Do you already own its stock? Or are Apple investors on track or missing something in your mind?
Be sure to check out our other stock analysis videos on companies like Tesla, NIO, Alibaba, and more. And check out this video that breaks down the top holdings in our $1 million stock portfolio. Thank you guys so much for watching. We'll see you in the next video.